All right. Thanks, everyone, for showing up. It's a fantastic event for us. This is the clicker. Fantastic. Let me see if this is working. All right. So here's the agenda. We're going to talk a little bit about how tokens and smart contracts work, utility versus security tokens, tokenization of assets on the blockchain. I see a lot of my students here. Thank you so much for coming tonight and supporting this. Regulation around the world, the ecosystem benefits, and what we think the future for 2020 is. So let's just make sure we stay on time. So my name is Alex Nascimento. This is my email. Feel free to email me if you have a question. Oops, where did I go? Oops, going backwards. Okay, sorry. Thought that was funny. So I teach blockchain business applications here in Security Tokens, and co-founded together with George Abe and Bhagwan Chowdhury the original club, which was the UCLA Blockchain Lab. And now we have Jason here and the whole team supporting us as a student club that it's like 700 strong with like 300 people on their Slack channel. So please join. Wrote this book that's being used to teach here at UCLA, so feel free to download it. Take a picture, use the promo code STO-Easton, and you'll get the book for free. And every time we update the book, you'll get a new update. This is a little bit about what I do during the day. I invest in security tokens and blockchain projects. We do research and education and advise companies. But one thing is important. I'm not a lawyer, and therefore do not intend to give you legal or financial advice. So this is very important. Consult a lawyer before you do any kind of ICO or STO project. So first things first, right? Why Jor is a great guy back there for you to consult, knows a lot about the space. I'm not a lawyer. So here's the interesting thing, right? So if you think about an investment contract, why is the blockchain a great solution? Because of this here. You can't create a double spending file. So when I take a picture of this beautiful audience and I send it to every one of you, now everyone has a copy of that file. Now with the blockchain, you don't have that. So one of the great things is that you can create these investment contracts coded on the blockchain and they become unique. So whoever is the holder of that file is the owner of that investment contract, which makes a very elegant solution for using investment contracts and all the other financial products. For those of you who are new to this, a smart contract is a machine or a computer that pairs together the buyer and seller and makes the exchange of goods for crypto or fiat and updates everyone involved. So the utilization of this technology for things like shares or coins or things of that nature that would provide some value created what we saw in 2016 to the end of 2017 and 2018 forward, a division of what's a utility or what's a security. Utility coins were famous for the ICO movement. Security tokens are now the hot trend. So a utility token, the way I want to think about it is that it's a token that gives you access to something. It represents future access to a software, a product, or a service. It's not designed to be financial investment or a financial product. One of the metaphors I like to use here is that it's like Disney dollars, right? You get a Disney dollar, you go to Disney, you use the Disney dollar to go on a ride, buy a hot dog, have fun. All great, right? It's not worth more, it's not worth less, it's just worth $1. Now, the security token is expected to increase in value. Therefore, people buy them because they operate as kind of an investment. So if you think about it, it's kind of like the old Disney stock. If you're old enough like me, you remember these stocks that you would receive in the mail and will be a certificate of ownership in the Disney company. So if we look deeper, A security is a fungible, negotiable financial instrument that has monetary value. You can go to Investopedia and see this. You can also go to Averipedia, which is a project that was born here at UCLA. So very proud of that project, which defines what is a security token, which is a type of cryptocurrency that derive their value from an external asset or a tradable security. So why do these securities matter, right? Why is this so important? Because essentially a company or a financial product could create an investment product, tokenize it, right? Give it to investors. Investors would trade them around. Every transaction would be recorded on the blockchain. The blockchain would provide updated information about who's the owner of that security, the value of it, and then the company could utilize that information to pay dividends up to the token holders again. Right? Some of these examples are real estate, derivatives, debt, equity, utility tokens that are now deemed security by the SEC. And one of the statements that I like to quote is the director of the SEC said, if you have voting rights or financial interest in a company, it is a security. So you must have heard of this. If it smells like a duck, quacks like a duck, it is a duck, walks like a duck. So most of these old ICOs had all these features, therefore considered a security. So what could we tokenize? What could be the tokenization form, right? A couple of examples is real estate, low-hanging fruit there. You could do shared ownership of buildings, of houses, of a mansion in Malibu. You could do startups, equities to tokens. You could also do mature companies, stocks to tokens. Maybe someone here has like a network of restaurants that you want to find funding. You could tokenize that. Energy. You could have tokens that represent watts, or art, which is a classical utilization and case study, promising case study, or funds. We're going to have some of the most relevant funds here in town today here speaking in our panel. So you could definitely have an ownership in a fund, a venture fund, a Bitcoin fund through a token. This is an important slide. If you're interested in this, I would take a picture of this. This talks a little bit about the ecosystem, right? And because these are security tokens, they tend to represent what's already existing in the market, right? So if you are an institutional investor, you need custody, right? Who's going to have the keys to the Bitcoin? The intern, because the senior partner doesn't understand the technology. So you need a third-party firm that will provide that custody, right? You add a new layer to what traditionally we see in the market, which is the issuance platform. There's some issuance platforms there like Polymath, Swarm, Republic, Securitized. There's a wide number of them. Then if you're in the United States, you also need a broker's license. And being a broker-dealer, a regulated entity that can sell these securities to clients and retail investors. Propeller, Coinbase, you also need a legal team to provide all your documentation. Furthermore, we're looking into the growth of many trading platforms where these security tokens will be traded. And you also need compliance services that will provide anti-money laundering, know your customer, all that fun stuff. Verify investors, NetKey are great examples. NetKey's here in LA. And here are some of the benefits, right? If you think about benefits, why should we do this? There is a significant number of cost reduction, faster settlement, and automated compliance. There are estimates that banks in general spend about $6 billion a year on those costs. There is a potential for an automated revenue sharing. When I go around and I talk about this topic, people get shocked, especially outside the United States, that only about 3,000 companies in the US paid dividends. Why? It's because it's so complex to do all that paperwork if you are not a huge company. All right? You can also have startup fundings. If you have a startup here, this technology could be for you, could help you raise funds. And you have the advantage of the secondary liquidity market, where you could trade these tokens around on a market that's 24/7 with 4.1 billion users on the internet and a facility of transfer and ownership. A great example of this is debt, right? So as debt gets repurchased throughout the financial system, you don't know who's actually holding that loan. But with a blockchain, you could have that information in real time. Are we doing in time? I think we're pretty good. This is a little bit of the historical transaction of what happened. I took some of this information from my friend Ben's here slide, so thank you, Ben. Appreciate for the idea. So why did we transition from ICO to SCOs? The Dow scandal of July of 2017 really called out the SEC, the Securities Exchange Commission, to say, whoa, wait a minute. You're selling securities out there, and they are unregulated. So we need to work on this, right? Then another popular ICO, the Munchie ICO, showed that this was really an unregistered sale of securities. As we evolved, Bitcoin, because it was so decentralized, was deemed by the SEC as a commodity. You can't call a 1-800 talk to the Bitcoin CEO. So the effort of being so decentralized and not being in the hands of others deemed that Bitcoin could be a commodity. As the market continued to evolve and the SEC continued to pressure these companies to regulate their offerings, we saw examples like Paragon and Aerofox being deemed unregulated securities that settled at court for penalties. Then we all that are parts of this movement of security tokens were very anxious of seeing one really become a full public offering. And we saw this year, in July actually, not June, in July of 2019, July 10th, sorry for that typo there, we saw two of them become full regulated public offerings under Reg A+, one Blockstack and the other Props. And then the most recent update is that in November of this year, the SEC is now looking back at the new evolution of Ethereum to see if that's going to qualify as a commodity or a security. The fact that it's staking might give it a look into being a security. So what are just some of the problems and opportunities of this space, right? Some of the problems, obviously, lack of liquidity. Somebody today commented on my post promoting the event is, where are all these STO traders trading, right? So we still are working into developing a secondary market. There is a clear international regulation. So if the effort is to trade among everyone in the world, that's still being hashed out by many of the governments. And there is also an incompatibility of these tokens because some of them are working into different standards and different blockchains. But so what are the opportunities? If you think about the global equity market, it's about $70 trillion, which the US represents 39%. And the global bonds market is $92 trillion, which the US represents 42%. So there is a lot to be tokenized. And you got about 4.1 billion users on the internet. If you don't believe me, these are some of the latest news that there is life after the ICO, which is the STO movement. Bank to the Future, which is a very interesting startup, claims that 50% of future startup funding is going to come through these security tokens. And we're seeing countries like Lithuania really develop strong STO guidelines. I also believe that institutional money is coming. We're seeing that very strongly. We're seeing like Swiss banks like Julius Baer accept crypto clients. The Chicago Mercantile Exchange futures trading of Bitcoin reached 33.7 thousand contracts. Fidelity Digital Assets is now rolling out a custody solution. We have pension funds investing in crypto funds. We have the New York Stock Exchange sister company backed, also helping launch a application that will help consumers buy and sell security tokens and cryptocurrencies. And banks like Silvergate are officially beginning to sell shares on the New York Stock Exchange, which is a crypto-friendly bank. So we're definitely seeing a lot of institutional support behind this. Some of the case studies that I like to talk about is like who's buying, who's selling, right? So banks are buying this, mainly because you have a significant cost reduction in settlement and compliance, and for all the other reasons I mentioned. Stock exchanges are also using this to move faster the identity. On the selling side, we have IBM and its cloud services providing development platforms and tools for people to develop projects that are security tokens onto their cloud. Microsoft is working with R3 so that R3 can utilize the Microsoft server. And Polymath, which is one of the main issuing platforms around, is now building their own blockchain to be focused on trading of security tokens. So this is definitely the future. So here's an interesting framework, which is how these different coins work around the world, right? You have Bitcoin and Ether, you have old ICOs and altcoins, you have stable coins, and you have security tokens. As you can see here in the United States, mostly will fall under security tokens. Countries like Japan have Bitcoin as a currency, where you can actually, if you recently take a trip to Japan, you can go into the grocery store and buy groceries with Bitcoin. Singapore is a very friendly STO country. Hong Kong has some obscure scenarios regarding ICOs, but their securities law definitely covers security tokens. In Europe is basically country specific, but there are a lot of countries in Europe that are very friendly to crypto and issuing security tokens regulations. Countries like Brazil are already moving in line with the SEC's regulation to issue security tokens. And in Switzerland, we've been seeing a very friendly approach where payment tokens and utility tokens are available, as well as securities tokens. This is an interesting piece here for the United States. In the United States, and this was the main reason why we wanted to push this content here at UCLA, is that if you ask, is there a regulation in the United States? Is it a good place to issue a crypto project? And we actually have the regulation, which was issued under the Obama administration, which is the Jobs Act. Nothing to do with Steve Jobs. The Jumpstart of Our Business Act, which breaks it down into a couple of steps, which it makes it easier for startups to raise money without having to go through all the paperwork, right? So a couple of things here is that you can start your startup at Regulation CF, which allows you to raise about exactly $1,070,000 through a crowdfunding campaign. And you could actually get any kind of investor into your crowdfunding campaign. As you build that fund, or as you build that capital into your startup, you can move into Regulation D, which is an option for you to raise money from only accredited or institutional investors. Accredited investors in the US are people of high net worth, but the ability here is that you can only sell to those individuals. There's a lockup period there that they have to hold it for 12 months, and then they can sell it in the open market or sell it to third parties, right? So as we evolved, we're going to see a lot of these crypto projects like moving from this lockup period into a free trading period. And that's another advent of a possibility of more liquidity in the market. But what got us all here really excited, people that support the security token movement, is the Reg A+, which the SEC actually approved 2 crypto projects to be a Reg A+ offering, which allows you to raise up to $50 million every year and do a public offering, sell it to anyone. Right? There is also a tier 1 of the Reg A exemption that allows you to raise 20 million. So there's 2 of them there that you can work. Some of the regulations around the world, to my point of some places being very friendly and some places not being so friendly to crypto projects, are listed here. So I'm just going to go over briefly so that we can catch up in time. In the United States, everything is a security. They use the Howey test, and it's an issuance of a stock, right? In Canada, there is actually no difference between utility and security. Everything is a token-generating event. In Bermuda, which we're helping the Bermuda government draft their laws, they have a very strong KYC and AML, but they're building a draft of a piece of regulation called DARE, Digital Assets Regulation Exchange, which is going to be very friendly to this market. In Brazil, you have the regulator analogous to the SEC, which is the CVM, which utilizes a lot of the rulings that happen in the States. So we believe that in that market, we'll eventually end up in the same situation as here, where people are able to issue public offerings like the Reg A+. In the European Union, it's very country by country. An example is Liechtenstein, which has a very open, friendly token issuance regulation. You have France, which you can issue a security token as long as it's not issued in another market. And you have countries like Estonia, which already has all their citizens and identity on the blockchain. You have other countries like Gibraltar, which is a very well-defined regulation of blockchain and decentralized ledger technologies with low taxation. But you have the issue of being a Brexit territory. You have Switzerland, like I mentioned, where you have a class of fintechs that are regulated. You have asset-based tokens, you have payment tokens, you have utility tokens. You have Malta, which is another country which has one of the largest trading volumes, given its regulatory friendliness. And the Maltese government actually issued a couple of different acts, one of them regulating whoever is a trader of crypto assets, called the Virtual Financial Asset Act. As you move to Asia, you have countries like Thailand who are looking to leapfrog into this market. You have strict countries like China, which, although said that they were very friendly to blockchain, deemed cryptocurrencies illegal. You have Malaysia, which has a new regulatory framework. And you obviously have Hong Kong, which you can utilize their already existing securities law to issue a security token. Like I mentioned, Japan, Bitcoin is currency there. Philippines has an economic zone that is very friendly to it. Singapore is a haven for security tokens. And South Korea, there has been some prohibitions. We see other countries more down and under, like Australia, being very friendly. And in the Middle East, Saudi Arabia and the Emirates are already using crypto as a project and a potential coin to do settlement and transaction between these countries. Mauritius also has a very friendly regulation. So it's just, these are some of them. On the back of the book, there is a wider description and chart of all the different ones that keeps getting updated. So the point here is that we're moving in a direction, right? And this direction is an adoption of this technology by many countries around the world, including countries that are looking to leapfrog their economy with the advent of this technology. If you ask me what the future is, I will tell you that I think that we're going to see more blockchain institutional products, and we're going to talk to Ben here on the panel about some of the institutional products that they're building at Wave Financial. We're going to see more clear regulations around the world, and a more friendly regulation. We're going to see an interoperability of security tokens. For those of you new to the market, this means that there's going to be a compatible standard for tokens and security tokens. And we're obviously going to see more security exchanges coming out. I leave you with this thought, which is Amaro's law, where we tend to overestimate the effects of a technology in the short run. And a lot of people did that with Bitcoin, and underestimate the effects in the long run, which is what I'm posing here, that we're going to see securities tokens really becoming a major player in the financial world. Piece of advice, if you think about doing anything on that, definitely get a lawyer. But if you keep a very good track record of who is the holder of your security token and who are they trading it with, who are the white lists that can trade this token, then you probably can avoid a lot of issues. This is the book that we are donating it. We're donating it to more than 30 universities, so feel free to send it to your friends. The whole idea here is to share the knowledge and use the promo code STObook-Easton to get it for free. People are taking a picture. Sure, I can go back. Yeah, welcome. And I would like to thank you very much. My name is Alex Nascimento. This is my information. Most of our classes that we teach here at UCLA, you can always find on that bit.ly link, because we just link it to the registration of the class. And thank you so much. Really appreciate the time.